Joining us now to talk all things markets is Nick Colas. Nick is the Chief Market Strategist at BNY ConvergEx Group, and of course, John and Dominic here with us. And I saw you shaking your head or nodding your head, I should say, when you heard that quote from David.
Yeah, David's got it exactly right. We're in maybe the second lap of a four-lap foot race, and it's the markets versus policymakers. And right now, the markets are way out ahead of the crisis versus the policymakers, but there's 2 laps left to go, and you only win when you cross the finish line at the end. So policymakers still have a chance, but I agree with David that we've got a couple more laps left to go.
Right, and John, you were saying time is of the essence right now.
Yeah, although I don't know if China sees itself as a charitable organization either. I mean, maybe they see themselves as Warren Buffett. They wanted to get more exposure to Europe, and maybe this is the time to do it. And of course, when they're on the world stage and making comments, they have to be cautious about what they say.
Yeah, absolutely. I mean, there's 2 things for great investment, the great opportunity and the great price. And you only get the great price during a large crisis, so they're lining themselves up to get that great price, but we're not there yet.
You know, some analysts would say right now that you're seeing a more direct piece of evidence in that Chinese statement about not bailing countries out, more so in Taiwan, South Korea, and other countries around that Asia-Pacific region that depend more on China. South Korea's Kospi down 3.5% today on that particular news. So is this really about China right now bailing people out, or is this more just another kind of tidbit that traders are trying to hang their hat on as a means to get bullish?
I think it is part of the story. You have to put all the pieces together to get the entire story. The European problem is so big that it's not just going to be China helping fix it, or the Europeans getting their act together to help fix it, or the Americans coming in to kind of tell them how to do it with the Geithner's visit at the end of the week. Everybody's got to get aligned and on board, and it's a very tricky process to get so many parties involved.
But don't you think you're in real trouble if you're buying stocks because you think China is going to come in and save the world? I mean,
yeah,
come on,
China,
right?
This is not phone a friend. You know, this is you're not going to be able to just hope somebody comes in with a couple of $100 million or even $1 billion and make the problems go away. The problems are deep, they are structural, and unfortunately, as you saw with the data this morning, they're beginning to seep into the U.S. economy as well.
Right, because even in the U.S. here, and this was part of David Rosenberg's note yesterday, is that what you're seeing also within the markets, though, structurally, I think he's, pointed out that the Dow Transport Index is down over 22% from a year high. Short interest is going way up. There was an article recently that even U.S. company CEOs are avoiding buying their own stocks and buying stocks in the U.S. So there's there are some problems here that cannot be masked over by these reports about China coming in or whoever coming in to bail out Europe.
That's right. And unfortunately, the longer it takes to sort of finish this foot race that I talked about, the more impact it's going to have on the U.S. economy. And we are going to a very critical part of the year with holiday season really just a few weeks away when you think about it. We're back to schools already through. It's going to be very important to get some momentum going in the U.S. economy, and we're really losing it because of all the stress in the capital markets in Europe.
Nick, you've talked about a quarter of the S&P 500 companies having big exposure to Europe. So what are the kinds of stocks that you would be avoiding if you're concerned right now?
I'll tell you, it really unfortunately spans the gamut, because if you think about large global branded companies that have large operations in Europe, they're going to be affected. If you're thinking about industrial companies or metals companies, basic industry companies, they're going to be affected because the economy is going to slow so dramatically that prices are going to come down. So really, it's unfortunately across the board. There's very few companies that are insulated entirely from a European situation.
Well, Nick, you've spoken to us in the past about this idea that everything is so correlated. The relationships, everything seems to move up and down together.
Yeah.
So are there levels from a strategist point of view that you're looking at? Is there a level in the S&P 500 that's attractive to step in and buy or sell if you want to sell a rally, so to speak?
Well, to me, there's sort of 2 large numbers that I know a lot of our clients are looking at. One is roughly 1,100, one is 1,000. So thinking about levels from here where you want to try to back up the truck and take a stand, those are the 2 levels I most often hear. But I also hear that clients are looking for things like levels in gold. They want to see gold have one final large move higher, and that'll indicate the panic is really through.
Nick, thank you.
Thank you
Great
so
to
much.
see you, Nick Colas.